Some interesting news coming through from your company, of course, restructuring and realigning of your business to ensure operational efficiencies and to mitigate some of the cost pressures that you've experienced over the past while. It seems that the market has taken this news in its stride. Give us a sense in terms of where to from here for Sappi and what are your targets for the future?
Good afternoon. Yes, I'm happy to do that. Where to from here? We are concentrating on two main issues. And the first one being positioning our business into higher margin growth markets rather than in the declining graphics markets, which is the biggest part of our business at the moment. On the other hand, the graphics paper business is a very large proportion of our business, and we believe that if we take out enough costs and make ourselves very competitive, we can generate very acceptable returns for many years to come in that business as well. Proof of that is what we've done in our North American business, and we're now applying the same to our European business. The exciting part of it is the investment for growth, like in Gondwana chemical cellulose, and doing all of this while keeping a close eye on our liquidity and our balance sheet.
Ralph Boettger, a very simplistic question. Are you putting lipstick on a pig, or are you fixing the business to cope with the declining demand for glossy paper?
Fair question. No, we're fixing it. We've in no denial that the graphic business in Europe and in all developed markets is in decline, that what we will see is continuous downward pressure on pricing and overcapacity. And if you can't manage that, and if you're not going to be the lowest cost producer, you ain't going to make money on that. So absolutely not. Very tough business, but we're fixing it and we're taking our medicine. At the same time, we know that if we want to be an exciting growth company, we need to find other areas of growth. And chemical cellulose is proven. We are the world leader. We're all making good margins and we're expanding in that part of our business.
Ralph, when you look at what, you're talking about taking the pain, some would argue that this should have actually happened far sooner. Of course, the paper industry has been in the doldrums and we have started to see a lot of closing of mills. We know in Europe the Biberist mill was closed in July, August this year. Why not embark on this strategy far sooner, or have you been working on the strategy for quite some time?
With hindsight, I think it's true. One should have done more. Thing is, you didn't know, and nobody knew that we would have in 2009, early 2008, massive downturn. The recovery came, and again, the second half of this year hasn't been great worldwide. So, is it too little, too late? Absolutely not. Would we have been better off if we acted sooner? Absolutely. But it's not too late, and we're very confident that the outlook for Sappi now is much more positive.
With regards to cost savings, what kind of percentages are we looking at here? We know that you're going to be embarking on retrenchments as well. Give us an indication of what kind of numbers we can look forward to in the future.
Well, we are absolutely convinced that we will meet our target of return on capital minimum of 12%. In Europe alone, we're looking at cost savings year on year of $100 million. In this new financial year that just commenced, we're looking at least a $30 million improvement in our South African paper business alone. So I think we're looking at a significant improvement given market conditions as they are today. The current weakening of the euro and the rand to us is very positive news. So what we're doing here is not only a cost-saving exercise, but it's also looking at our revenue line into the future. So yeah, I'm positive you'll see much improved numbers coming from Sappi.
Fantastic.
In this new financial year.
Fantastic, Ralph. We have to leave it there. Thank you so very much for joining us on the program. Great, much appreciated. Of course, Ralph Boettger, the CEO of Sappi. Still with me is Wayne McCurrie from Momentum. Thank you so much, Wayne. So what is your sense?
Look,
is this convincing
Sappi,
enough to buy into a paper maker?
Sappi is a very interesting case. It's not Sappi, it's the paper industry we're looking at. Everyone kept saying for 10 years, it's a late cycle commodity. Every other commodity has run, paper hasn't run. And I think what we all failed to realize is that you just don't use that much glossy paper anymore. The system just doesn't use it that much anymore. And Sappi, I think, with hindsight, and of course everything's easy to criticize with hindsight. The big operation they bought in Europe, I don't know, was that 5, 6, 7 years ago, and they bought it to close it down to try and fix up the overcapacity, was just the wrong thing to do. They should have just closed some of their own mills to sort out overcapacity. The cellulose business, in other words known as pulp, that when you go to the Kruger Park, you drive past their big factory that makes pulp. That seems very, very good business. And as long as they just are in the bottom quartile cost-wise, close all the overcapacity, get rid of that, it can do well, but it's still a cyclical business in a declining industry. Their graphic paper side, their glossy side, is a cyclical business, and it's on a structural
and it's
decline.
Of course linked to magazines, and we know that many people are now shifting to the
Yeah,
online
you just go online. So it's just one of those declining industries.
Do you have exposure to
Yes, it's a very small.
Sappi?
Yeah, very small. We haven't got any Mondi, unfortunately. If you look at past price performance, we've got a little bit of Sappi.
Okay, well, top 40 index is behind us, so lots of green, a little
Yeah,
bit of
look, the
red.
market was way stronger earlier on,
Yeah.
eh? I mean, this thing was
So
up
we're off our
almost
best levels
3%.
today.
We're way off our best levels today. And certainly the power earlier on was in the resource shares. Now, they haven't done badly, but the banks have kept going up all day. I mean, they've hardly fallen back. I'm not too sure why any particular reason the banks are running.
In sympathy perhaps with the rally that we're seeing in
it's
Europe,
quite possible, yeah. Although our banks aren't really associated with the European banking story, but there could be some sympathy there. I think FirstRand might have a last day to register for that big special dividend today. So that might be why FirstRand's right. People want to buy the share, get the dividend, then sell the share. So we see what FirstRand does next week. But I mean, the market's above 30,000, you know, so it's now virtually exactly where it was a year ago this time. So it hasn't done much in the last year. It's been up and down a lot, but it hasn't actually done much in total. But hopefully, and I really hope that this is true, we won't see panic in the market, because you just start to think, okay, the worst is over, and then the next day it falls another 3% because of something that's gone wrong somewhere.
But if you're invested in the long term, it shouldn't really worry you that much.
No,
it
it
should give you
shouldn't. No,
opportunity to buy, but again, we're minus for this year so far.
Totally. But we're not computers. You know,
Is it difficult
computers
to
think like that.
Is it difficult to outperform the markets at this point? And obviously you run funds, so you've got various benchmarks.
Yeah.
Do you use the JSE All Share as a benchmark? Is it tough
Very
to
few
outperform at this
people
point?
use the JSE as the All Share as the benchmark anymore, simply because no one owns that exposure to resource shares. But I mean, I suppose it's always difficult to beat the market. It's even more so in volatile markets to actually beat whatever benchmark you're using. It's difficult. I mean, we have got significantly less risk in our portfolios than we normally would have. And that was a conscious decision 3 or 4 months ago. We just de-risked the portfolio because there's positive and negatives. We didn't know what was going to happen, so we just de-risked.
Given the fact that we have downgraded growth outlooks on a global level, we know that demand for commodities is naturally going to weaken because of the dampening in the demand for growth, essentially. Is it still a good time to buy those growth stocks at this point?
Well, look,
because we
I
don't
mean,
know
this
how
is
long
the
this
debatable issue.
protracted,
This is
benign growth rate is going to last.
You've
for.
explained the negative, i.e. resource prices can fall. The other side of the coin is these shares are not expensive. These are 7, 8 PE shares,
Do you
and
think
I know
they've
it's
priced in
elevated.
this negative growth?
So simplistically, and I know this is very simple, the share prices, the resource share prices in my view, have priced in half of what happened in 2007. So if economic reality is half as bad as what happened in the credit crunch, the shares are fine. If we get another disaster in the economy like the credit crunch, the shares will fall another 20-25%. That's my view.